Hi, everybody. Peter Schiff. It's Friday, June 12th, 2009. Anyway, the dollar got a little bit of a reprieve today. It rallied overnight on the back of some comments from an official at the Bank of Japan. Basically, the Bank of Japan said that they have complete, absolute confidence in the dollar, in our treasury market. In fact, they said their faith in U.S. treasuries is unshakable. They said that the U.S. dollar's status as a reserve currency is under no threat at all, and they said they had complete and absolute faith in our strong dollar policy. I mean, this is who are they kidding? There's no way that they can possibly think that. I mean, they're not idiots over there in Japan. Obviously, somebody from the U.S. sensed that the dollar was vulnerable, and we asked the Japanese to say something to talk it up. But there's no way they actually, any more than the CEO of Bear Stearns when he came on television saying everything was fine. I mean, he must have known there were problems. Obviously, the Japanese know that there are some serious problems here. I mean, first of all, they said they have absolute faith in the strong dollar policy. I mean, that's impossible. I mean, there is no strong dollar policy. I mean, the strong dollar policy is like the Loch Ness Monster. I mean, no one's ever seen it. You can talk about it. I mean, the reality is, if there is a strong dollar policy, it's just talk, right? The strong dollar policy is the Secretary of the Treasury coming up to a microphone and saying that a strong dollar is in the national interest, that we support a strong dollar. But beyond that, that's it. There's nothing else to it. When I wrote about it in my book, Crash Proof, I said it's like a student having a straight A policy, except he cuts class, he does drugs, he doesn't study. All he does is say he's got a straight A policy. Now, I don't think the teachers are going to cooperate, although maybe in the American school system they might, but he's going to get Fs despite the fact that he's got an A policy. Well, we may have a strong dollar policy, but if we're going to run them, crank up the printing presses, if we're not going to save and we're not going to produce, we're going to have huge budget and trade deficits, we can't have a strong dollar. It's completely inconsistent. We've got a weak dollar policy no matter how we describe it. And the fact that the Japanese are saying they have confidence in it, I mean, they're just making it up. They also are saying that they have complete confidence in the Treasury. How can that be? I mean, what have we done to instill confidence? And they actually said that it's unshakable. That unshakable means there's nothing that we could do to alter that confidence. It's unshakable. I mean, what kind of message is that? We don't want to say that, if the Japanese are saying that it's unshakable, the message they're sending the U.S. Treasury is, okay, we got a green light to be as irresponsible as we want. No matter how much money we want to borrow, the Japanese will just lend it to us. They don't care if we can pay it back because their confidence is unshakable. I mean, why would they say that? I mean, they would want to couch the language that, well, as long as the U.S. government does this or reins in their excess spending, or we have confidence they're going to do this, but to simply state that the confidence is unshakable. I mean, the only reason they would do that is just for pure show, to try to talk up the currency. Now, I'm sure a lot of our other creditors are smart enough to understand that this is all a charade, and if the Japanese are going to be foolish enough to hold on to their dollars, you have a lot of smaller creditors that are going to be taking the opportunity to sell. And I'm sure the Japanese know that. So, I mean, they must be behind the scenes trying to contemplate an exit strategy, some way to get out of this untenable position. But in the short run, they want to talk it up. I mean, just like anybody would. Anybody who is trying to get out of a security. There's something in the securities industry we call pump and dump. And that's when you publicly tout a stock and then you privately sell it. You try to generate some hype. Now, maybe that's what the Japanese are doing. Maybe they want to talk up the dollar so they can get rid of their dollars. I mean, they certainly can't be foolish enough to believe the things that they're saying. In fact, one of the things they actually said, and I couldn't even believe this, they said, we're not going to sell our dollars unless they lose half their value. If the dollar loses half its value, then maybe we'll sell. I mean, what kind of crazy statement is that? I mean, first of all, you go back to 1971 when we floated the dollar and left the gold standard, the dollar was worth 360 Japanese yen. Today, the dollar is worth, 100 yen. It's already lost well over half its value. It can easily lose another half. Remember, the dollar got down to 80 yen in 1995. I think it can easily hit 50 yen in the next year or two. So now the Japanese are saying, we've got confidence in the dollar at 100 yen. We don't want to sell any. But if it goes down to 50, we're going to sell it all. I mean, if that's not waving a flag at speculators to say, hey, if we can drive the dollar down to 50 yen, we're going to flush out the biggest seller of them all, the Japanese government, and then the shorts could cover their position. I mean, that's the last thing that you would want to do is reveal that you're willing to take a huge loss at a lower level. And of course, if the Japanese would dump their dollars at an exchange rate of 50 to the yen, why wouldn't they do it at 100? That's twice the price. I mean, obviously, based on the fiscal and monetary policies we're pursuing, there's only one direction for the dollar, and that's down. And even if it declines in a relatively orderly manner, if you just look at the trend for the last 30 or 40 years, there's no question that the dollar is going to be worth 50 yen. I mean, at some point, it's going to be worth less than 50 yen. Now, it's my feeling that based on the extreme incompetence and what we're doing now with our fiscal and monetary policy, we can hit 50 yen in the next couple of years. So again, it seemed to me that based on where the dollar was and based on how weak the charts were, we made this phone call, we called in some favors, and we got one of the biggest holders of U.S. dollars to say some very, very positive things to prop it up. Now, notice that it wasn't our Secretary of the Treasury who was saying these things. Maybe people would see through that. That's obviously self-serving. So we got one of our creditors to come out and announce their uncommitted confidence and unconditional strength in our markets, in our economy, in our treasury. In fact, the statements were so powerful and so positive that they were obviously fake. Because there's no way, as I said from the beginning, there's no way the Japanese could possibly be this stupid. And it's amazing if anybody actually see-throughs it. Now, the dollar still had a pretty strong day today. It closed well off its highs. The dollar index closed a little bit above 80. I think it was up about twice as much as it ended up closing. Of course, the strength of the dollar, gold was off about $15. Commodity prices in general were lower. But, looking across the board, foreign stock markets, again, did pretty well overnight. Again, much better. The U.S. stock market has pretty much been eking out a sideways pattern for the last couple of weeks. Other markets continue to rise. I still see a lot of the stocks that we're dealing in, with these 5 to 10% increases in a given day. I mean, not all of them are like that, but it's not rare to see 5 or 6 of the stocks that I'm following or I'm buying make these big jumps intraday. And this is not normal behavior. A year ago, 2 years ago, the stocks that I'm buying didn't have these kind of jumps. So basically what's going on is behind the scenes, this end of the world, global deflation trade is being unwound. The forced sellers are out of the market. And in order to find new sellers to accommodate the buying, prices are moving up. They're having to move up rather dramatically to entice willing sellers. When prices were collapsing and you had panic sellers, you had forced sellers, you had really cheap prices. Now that you have a more normal condition in the market, it's difficult to find willing sellers at these valuations. So the only way to clear the demand is to do it with higher price. Anyway, that's it for today. I hope everybody has a great weekend. I'll be back again next week. So long, everybody.